Welcome back, everybody. Ready for another deep dive?
I am.
Awesome. Today we're looking at the latest financial report from FDC Ltd. They've been in the news a lot recently, so I thought it would be fun to take a closer look.
Yeah, I think a deep dive is definitely warranted.
Yeah. So FDC, for anyone who doesn't know, they're kind of all over the place.
That's one way to put it.
Yeah.
They're in the food business, the drug business,
Yeah.
even chemicals.
Like, if you need something, chances are they
Probably make it.
Yeah, it's wild. And they're not just some small local operation either. They've got a huge presence, especially in India where they're based.
Oh, yeah. Over 6,000 employees. And get this, 7 manufacturing facilities across the country.
Wow, that's a lot of factories.
It is. And they're shipping their products all over the world, over 40 countries.
Globally, huh?
Globally. And they've got all the right approvals, too, like from the US FDA and the UK MHRA.
So we know they're meeting some pretty strict standards.
Oh, yeah, definitely.
That's always good to know. So with all that in mind, let's get into their recent performance.
Okay, let's do it.
First up, revenue. How much money did they bring in?
Well, for Q2 of FY25, their revenue from operations was a cool euro 486.4 crores.
All right, break that down for me. What's that actually mean?
It's a 9.3% increase compared to the same quarter last year, which on its own is pretty good.
Yeah.
But what's even better is that this growth is consistent. It's not just a one-time thing.
Okay, I like the sound of that.
So for the first half of the fiscal year, their total revenue reached 1,022.7 crores,
Whoa.
up 8.8% year over year.
So they're definitely on an upward trajectory.
They are. And it's not just one part of their business either. Both domestic and international are doing well.
So they're not putting all their eggs in one basket, so to speak.
Exactly. Now let's talk profits.
All right, hit me with the numbers.
Their profit after tax for Q2 FY25 was 69.8 crores. That's a 34.8% jump from the same time last year.
Wow, someone's doing something right.
And for the year so far, their profit is even more impressive. 179.6 crores. That's a 46.6% increase.
So what's the secret sauce? What's driving these awesome profits?
Well, a couple of things. They've managed to lower their costs of goods sold, which is always good for the bottom line.
Yeah, makes sense.
And they've also kept their operating expenses in check. This has really boosted their EBITDA.
EBITDA, for those of us playing at home.
It's basically a measure of a company's operating profitability, and theirs is looking very healthy.
I bet their shareholders are happy campers.
They are. Speaking of which, FTC just announced a dividend of €0 per share for FY25.
Nice. That's a little extra something for those who invested in the company. It definitely signals confidence in their future.
Right, like they're saying, we're doing great and we expect to keep doing great.
I like that attitude. So let's dig a little deeper. What are some of the things that are making FDC so successful?
Let's start with their domestic business.
The heart of their operations.
Exactly. Domestic sales have been strong, reaching 836 crores in the first half of this fiscal year.
So what are their best-selling products? What's flying off the shelves?
Well, their flagship product, Electrol, is doing phenomenally well. It's the leader in the ORS category. You know, those rehydration solutions.
Ah, yes, like when you're sick or dehydrated.
Exactly. And Electrol just crossed the 400 crore sales mark.
That's huge. I guess it's a must-have in a place like India.
Oh, yeah. But it's not their only star performer. Ziffy, their antibiotic, is still a top contender in the Cefixime market.
Keeping those infections at bay.
Right. And then there's Enerzol, their energy drink, also a market leader and growing quickly.
So they got a good mix of established products and new ones too, right?
Yeah. They just launched Ziffy X, and it's already their second best-selling new product. Brought in 6.14 crores in sales in just half a year.
So they're not just resting on their laurels. They're constantly innovating and bringing new products to market.
That's one of the keys to their success, for sure. And all this has made them the third fastest growing company in their entire sector.
That's pretty impressive. So what about their international business? What's happening on that front?
Well, their exports are doing quite well. They reached 144 crores in the first half of FY25.
All right, not bad.
Yeah, and remember, they're selling in over 40 countries. They've even got offices in the UK and South Africa.
Wow, a truly global company.
And in the US, they have 8 NDAs.
NDA, I'm not familiar with that term.
It stands for Abbreviated New Drug Application. Basically, it means they have approval to sell generic versions of brand-name drugs in the U.S. market.
Ah, got it. So they're tapping into that huge U.S. pharmaceutical market.
Exactly. And they're also doing some really interesting things in their API business.
API, fill me in.
That stands for active pharmaceutical ingredients, the actual stuff that makes medicines work.
Right.
So FDC is focusing on backward integration for their APIs.
Backward integration. I'm going to need you to break that down for me.
Sure, it basically means they're taking control of more steps in the production process. Instead of buying pre-made ingredients, they're making them themselves.
So they're becoming more self-sufficient.
Right. And that can lead to higher quality, lower costs, and ultimately bigger profits.
Smart move. Now, all this growth and expansion must require a solid financial foundation, right?
Absolutely.
Oh.
Let's take a look at how their finances are shaping up. One key indicator is their cash flow.
Cash is king, as they say.
Very true. And FDC generated a whopping 22,470.49 lakhs in net cash from operations during the first half FY25.
So they're turning their sales into actual cash quite effectively.
They are, and that's essential for any business to thrive. They're also investing heavily in their future.
Ooh, like what?
Well, they've put a lot of money into property, plant, and equipment. And they've been busy buying and selling financial instruments as well.
Sounds like they're playing the long game.
They are. Now, the data we have doesn't explicitly mention their debt levels.
That's something we always want to keep an eye on.
Absolutely. It is something you might want to investigate further.
So a little homework for our listeners.
Exactly. You want to check their balance sheet and compare their debt levels to other companies in the industry.
Yeah, it's always good to know how much debt a company is carrying. It can tell you a lot about their financial risk.
Precisely. But so far, FDC seems to be in a very healthy position. Strong revenue growth, impressive profits, strategic investments. They're doing a lot of things right.
Definitely a company to watch. All right, that's a wrap for part 1 of our FDC deep dive. We've covered a lot of ground, their business model, their key products, their financial performance, and we even gave our listeners a little homework assignment.
But there's always more to the story.
Right? Oh, yeah. Numbers only tell us so much.
Exactly.
We got to look beyond the balance sheet.
We need context.
Exactly. So let's talk about competition. Who are FDC's biggest rivals?
Well, the pharmaceutical and healthcare industries, they're tough.
Yeah, I bet.
Tons of companies fighting for market share. In India, especially.
So who are the big names that FDC's up against?
Well, you've got the domestic giants, like Sun Pharma, Cipla.
Those are big ones.
Oh, yeah, huge. Also, Dr. Reddy's Laboratories, Zydus Cadila.
Okay, yeah, I've heard of some of those.
They're all major players with a wide range of products.
So how does FDC stack up? What are they doing to stay competitive in this crowded market?
Well, one of the biggest challenges is pricing pressure.
Yeah. Healthcare costs are a concern everywhere.
They are, and that puts pressure on companies to keep prices low.
Which can squeeze their profits.
Exactly. It's a tough balancing act.
Yeah.
They got to be competitive on price, but also make enough money to keep the lights on.
Right. So what else are they dealing with?
Regulatory changes, that's a big one.
The pharma industry is heavily regulated.
Oh, yeah, for good reason. Yeah. But it means companies have to stay on top of things. Rules change all the time.
Got to be adaptable.
Exactly. They need to be able to adjust quickly to new regulations, make sure their products and factories are compliant.
Otherwise, they could face fines, delays, recalls even.
That's right. And that can be costly in more ways than one.
Absolutely. So we've talked about competition, regulations. What about the bigger picture? Like, how's the global economy affecting FDC?
That's a great question. And honestly, the global economic outlook is a bit uncertain right now.
Yeah, lots of talk about inflation, potential recession.
Yeah, it's a mixed bag out there. And all of that can impact FDC both positively and negatively.
In what ways?
Well, inflation leads to higher costs for raw materials, manufacturing.
If those costs can't be passed on to consumers?
Then profit margins get squeezed.
Makes sense.
And then there are supply chain issues, still having disruptions.
We've all seen that the past few years.
Exactly. So delays in production, shipping, all of that can affect FDC's ability to meet demand.
Right. They can't sell what they can't deliver.
And then there's the recession risk. If economies slow down, people buy less stuff, including medicines.
Especially non-essential ones, maybe.
Yeah, potentially. So FDC has to be aware of all these global trends and adjust their strategies accordingly.
It's like they're sailing in uncharted waters. They need to be prepared for anything.
That's a great analogy. So they got to be flexible, make smart decisions, and be able to pivot quickly when needed.
So amidst all this uncertainty, are there any bright spots, any opportunities for FDC to capitalize on?
Oh, absolutely. One big one is the growing demand for generic drugs.
Generic drugs,
Well,
as
right.
opposed to?
Brand name drugs. Generics are much cheaper.
Ah, Okay. And as healthcare costs rise,
People are looking for more affordable options.
that makes sense.
So FTC is well positioned to tap into that market. They already have a strong presence in many countries.
Especially in the US, right, where they have those AMEAs we talked about earlier.
Exactly. And they've got the capacity to scale up production to meet that growing demand.
So generics could be a big win for them. What else?
Another opportunity lies in preventive healthcare and wellness.
People are becoming more health conscious these
They
days.
are, and they're willing to spend money on products and services that can help them stay healthy.
Vitamins, supplements, that sort of thing.
Yeah, and also things like healthy foods, fitness programs, even mental wellness apps.
So FTC could expand their offerings beyond just medicines.
Exactly. They could leverage their expertise in areas like nutrition and develop a whole suite of wellness products.
That's smart. Diversify their portfolio, cater to a wider range of consumer needs.
Right. And it plays into that whole trend of people taking a more proactive approach to their health.
Instead of just treating illnesses, they're trying to prevent them in the first place.
Exactly. It's a huge market with lots of potential for growth.
So FTC's got a lot of exciting opportunities on the horizon, but I imagine there are also challenges they'll need to overcome. What are some of the hurdles they might encounter?
Well, competition is always a factor.
Of course.
We talked about the big players in India, but they're facing competition globally too. Lots of companies vying for a piece of the pie.
So how can FDC stand out from the crowd?
Well, they need to build a strong brand, communicate their value proposition clearly, offer exceptional customer service.
Basically, they need to give people a reason to choose them over the competition.
Exactly. And they also need to keep innovating.
The pharma industry is constantly evolving, new discoveries all the time.
Yeah, so FTC can't afford to rest on their laurels. They need to invest in R&D, stay ahead of the curve, keep bringing new and improved products to market.
Otherwise, they risk falling behind.
Exactly. And in today's fast-paced world, that can happen very quickly.
So innovation is key. What else?
Well, talent acquisition is also a big one.
Finding the right people.
Yeah, they need skilled scientists, researchers, marketers, managers, people who can help them achieve their goals.
That's true for any company, really, but especially in a field like pharmaceuticals where expertise is so crucial.
Absolutely. So FTC needs to create a work environment that attracts and retains top talent.
Competitive salaries, good benefits, opportunities for growth, that sort of thing.
Exactly. And also a culture of innovation where people feel empowered to take risks and think outside the box.
Because at the end of the day, a company is only as good as its people.
Very true. And FTC seems to understand that.
All right, so we've talked about competition, innovation, talent. What's the key takeaway you want our listeners to remember about FTC's challenges?
I think the main thing is that even though FTC is performing well right now, they're not immune to the headwinds facing the industry.
There are always bumps in the road, right?
Exactly. And how they navigate those bumps will determine their long-term success.
Makes sense.
So it's a story that's still unfolding.
And we'll be watching closely to see what happens next. It's like we've given our listeners a sneak peek behind the curtain at FTC.
Exactly. We've seen the good, the challenges.
The whole picture.
Yeah. But remember, investing is all about looking ahead, right?
Predicting the future.
Trying to, at least.
So with everything we've learned about FDC, what are some key things our listeners should consider as they think about their future?
Well, we touched on their debt levels earlier, but that's worth another look.
Yeah, debt can be a double-edged sword, can't it?
It can. Useful for growth, but got to manage it carefully.
So what should our listeners be looking for specifically?
Key ratios, like debt to equity, interest coverage. Compare those to industry averages.
See how FDC stacks up against their peers.
Exactly. That'll give a better sense of their financial risk.
Like, are they taking on too much debt? Could it become a problem down the road?
Those are the questions to ask.
So it's not just about the numbers themselves, but what they tell us about the company's overall health.
Right. Got to dig deeper, connect the dots.
That's what we're all about here on the Deep Dive.
Absolutely. Encouraging our listeners to think critically.
So as we wrap things up here, what's the big question our listeners should be pondering as they continue their own FDC investigations?
Well, given everything we've discussed, the financials, the competition, the global trends, all of it, do you think FDC is set up for success in the long run?
The million-dollar question.
It is. And there's no easy answer.
Forces our listeners to weigh the evidence.
Consider the pros and cons.
Make their own informed judgment.
Exactly. And that's what makes investing so interesting, right?
Absolutely. It's not just about following the crowd. It's about doing your own research,
Making your own decisions.
taking ownership of your financial future.
Couldn't have said it better myself.
Well, folks, that's a wrap on our deep dive into FDC Limited. We hope you found it insightful and maybe even a little bit inspiring.
As always, thanks for joining us. Keep those brains engaged.
And remember, the best investment you can make is in your own knowledge. See you next time.